I'd like to call the meeting to order for the Budget and Finance Commission meeting, January 11th, 2018. Can I have a roll call, please?
Commissioner Samples?
Here.
Commissioner Esser?
Here.
Commissioner Morocco?
Here.
Commissioner Johnson, absent. Commissioner Solomon?
Here.
Commissioner Nguyen?
Here.
Chair Chun.
Present. Could I have Commissioner Esser? Would you like to start us with the salute to the flag?
Okay, ready? Go. I
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Happy New Year, everyone. Item number 2, approval of order of agenda. I did confirm with city staff that the minutes from the previous meeting were not ready, so they will be ready for approval at our next meeting in February. So do I have a motion to approve the order of agenda?
I so move.
Second.
All in favor?
Aye.
Aye. All opposed? Motion passed. We do have a blue folder item today. Item number 3, blue folder item. It is the Budget and Finance Commission meeting, adopt a resolution, C5, amending bylaws regarding time of its meeting. Do we need to discuss this? Essentially, it is really item number 8.5. It is just a amendment of the actual, is that correct? Yeah.
Is this an amendment? Is this a resolution with regard to the schedule as well?
There's no change to it. This one, though, has the city attorney's blue stamp on
Okay.
it. So
Oh,
he has now blessed it.
okay,
It's official.
okay.
I can't wait to find out who the special guest is, July 12th. I make a motion to adopt the resolution,
This is the
Number-
receive and file.
receive and file, okay. A motion to receive and file a resolution.
Second.
All in favor?
Aye.
Aye. All opposed? Motion passes. Item number 5, excluded consent calendar. There is nothing on that. Item number 6, is there any audience participation? None. Okay. Item number 7, any old business? No old business.
Did we approve the posting? Item number 4? Regular-
Oh, sorry.
We need to approve
That is
that, right?
correct. Thank you, Commissioner Nguyen. Item number 4, consent calendar. Number 4, approval of affidavit of posting for the regular Budget and Finance Commission meeting of January 11th, 2018. Do I have a motion to approve?
I move.
Second.
All in favor?
Aye.
Aye.
Thanks.
All opposed? Motion passes. Thank you, Commissioner Nguyen.
Thank you.
Item number 8, new business. Maybe that's the reason why. Item number 5, adopt a resolution amending bylaws regarding time of its meetings. Recommendation to discuss. Anything to discuss regarding the resolution?
Is the resolution just changing 6 meetings to every month? So 6 meetings annually, now we're going to have 12 meetings?
Yes,
Okay.
yeah,
Schedule too, isn't it, or?
right.
Correct. And it's essentially this blue folder item. And you will see the resolution that needs to be signed and passed, and then also the actual schedule on the last page. Essentially, we are meeting every single month. Previously, it was every other month.
Right, you adopted that by resolution, so to change it back to every month, we need a resolution again then.
And then is there any change to the days? We're still meeting on Thursdays? right?
It'll be the second Thursday of each month. There's just two exceptions. The meeting in April will be moved to coincide with the Public Works Commission meeting because you'll be having a joint meeting with them. And then the May meeting is being moved back some so that you will have time to review the proposed budget document before discussing it at that May meeting.
Okay.
Was there some discussion at the time that we were going to have an opportunity to review the proposed budget in May and then have a meeting afterwards for staff to respond to questions that we had before it went to city council?
Right, so the June 14th meeting,
Will be before city council and an opportunity for
Yes.
questions that we have on May 24th
Yes.
to be addressed.
council isn't expected to adopt till June 20, I think it is.
Okay, thank you.
Also, on February 8th, we do have the opportunity to meet with the city manager regarding the budget. Correct.
Right, you'll hear an update to our current fiscal year and provide some input for the upcoming fiscal year.
And that's when we're going to discuss all the issues we brought up last.
Any questions that we have as a commission or additional questions that we have between now and then?
Yeah.
And I assume that the July 12th meeting is a city official? State, maybe?
Our hope is to have a representative from CalPERS here. If we're not able to arrange that, we'll find, we have a couple others in mind, but it'll all be centered around some item in the budget and give you a outside perspective on it.
Any further questions from the commissioners?
Nope, I'm all good.
Motion to receive and file the resolution?
I move.
Second.
All in favor?
Aye.
Aye. All opposed? Motion passes. Resolution passes. So at the end of the meeting, I believe I will be signing? Okay. All right. Item number 6, Internal Service Fund Overhead Allocation, Administrative Policy and Procedures. Discuss. Marnie?
We are working currently on updating our internal service fund and overhead allocations. We do that annually and present it as a mid-year budget decision package, the changes to it. With that, we'll provide the administrative policy and procedures. We call them APPs. We will have those there as well because the APP describes how the allocations are done. So we have been using internal service funds for a really long time. Before 1983-84, the Vehicle Replacement Fund was in place. Our current structure of internal service fund and overhead allocations was put in place in 2005-06. We've added some allocations since then, but the structure was put in place at that time. In 1998 and 99, the city adopted financial principles, and in there are principles for allocating overhead. In 2007-08, those our allocation methodology was started to be presented to council and any reader of our budget response reports. We put how we were calculating them in that report. Then in 2008 and 9, the financial principles were updated to include clarification on our allocation methodology. Then in 2009-10, those methodologies that we had been describing in budget response reports each year, we formalized in an APP. In fiscal year 12-13, we updated those to reflect current operations, and now here at this time we're looking to update the policy again just for reflecting how the city is operating today. So the changes to the APP gave you a red line version so that you could see these changes. We deleted the overhead allocation for recreation services website services. We had an employee in recreation services who was supporting staff in updating the website. And so since that benefited all departments of the city, part of his time was allocated out to the departments. That the person doing that is no longer in recreation services. Our information technology department is performing those services. So we do not need to allocate recreation services anymore. We added employee count as a basis for city facility sewer fee allocation. We were primarily doing it on square footage and wanted to kind of equalize that out with employee count as well. The city departments pay the same sewer fee that all residents and businesses pay. We updated the city manager's allocated services. City manager's department looks a little bit different today than it did back at the time of its last update. They had more employees and were doing more of the services themselves. Kind of switched it around now that there's only city manager and assistant city manager. So we've updated it for their services. The fire administration has an allocation, an overhead allocation to its divisions, to the fire department divisions. It was being calculated based on estimates. The police department and the Public Works Department also do that for their divisions, and they had, instead of an estimate of time, they were using 50% budget and 50% employee count, and so we've made the fires allocation basis consistent with those. And lastly, we've deleted the overhead allocation for community services departmental support. Back previously, community services was helping out other departments, and they charged for that, but that's no longer happening, so we've revised it.
Excuse me, Marnie, what the fire administration support to its division, those are non-sworn personnel, is that what you're talking about there?
It is really fire administration is pretty much just the chief and the analyst.
Okay, and that's it? Mm-hmm. Okay, thank you.
And that's all we have as far as updates.
So essentially, Marnie, it's just minor tweaks just to better align this.
Right, exactly, to match our current operations.
Any further comments, commissioners?
No.
Recommendation to receive and...
I have some
Oh,
questions.
sure.
So I have some questions, please, Marnie, about the ISF and some other things. So when we had the auditors here at our last meeting, there was a item that they recharacterized with something in the capital improvement fund that was part of an ISF charge. It was $500,000. Can you elaborate on that or tell us about that a little bit?
The city purchased a piece of property and had several funding sources for that piece of property. The vehicle replacement fund was one of those funding sources. So internal service funds are recorded as proprietary, so they do include assets. So instead of showing as an expense in the vehicle replacement fund, it should show as an asset in that fund. Instead, it was grouped with, in error, obviously they found our error, it was grouped with the other funding sources and put as an asset there on our citywide.
It was grouped as part
statements.
of capital improvements? Or it was grouped within what,
Our-
what asset class?
Our capital assets.
Capital assets?
Yes.
Okay.
Uh-huh.
Okay.
And so then they pointed it out to us. We did the journal entry to move it from there into the internal service fund, took the expense away from the internal service fund, and then our financial statements were presented correctly.
Okay. On our charges or how we allocate charges in the ISF for insurance,
Right.
if you look at places like the Harbor Enterprise, the Highlands and the Uplands, there are a series of leases there. And the leases generate, the total value of the leases was something like $150 million. Each of those leases, when they're secured, provides that the city, the occupant of the leasehold, provide insurance, and that the city be named as an additional insured on those policies, thus laying off risk from the city back onto the leaseholder, or laying off part of what might be otherwise risk that we would have to bear solely on our own for that area. So I feel like we may be charging those areas that have a lot of leaseholds, like the Harbor Enterprise area, twice for liability insurance, because we're already laying off some of those expenses onto the leaseholders that we don't otherwise have to bear, those costs that we don't have to bear. So some of those expenses that might otherwise be formulated for liability, for claims that are incurred but not reported, for liability and property insurance, premium expenses is one thing, but that claim exposure and that incurred but not reported exposure would be lower, or should be lower, because that exposure or expense is already being absorbed by us carrying on or piggybacking onto the leaseholders.
I'm not involved in procuring our insurance, but I'm certain that the claims there, the claims that have been filed and may be filed, take into account whether the city would be responsible on those claims or not.
So you're thinking, well, it'd be interesting to find out when formulating how the charges for insurance are being applied to each department and each area, that are they looking at it globally on a macro level and saying we have all of these claims for this area, whether it be the Performing Arts Center, the harbor, city complexes, parks, wherever it is, but more specifically those places where we have leaseholders, and saying, because if a claim comes in and somebody injures themselves down on the International Boardwalk inside Najas, sorry Najas, then that claim comes into the city, we hand off the defense and likely indemnity of that over to whoever Naja's insurance is. So I'd be interested in seeing if that's being separated out when we're determining how much we're charging the harbor area for insurance. Otherwise, they're paying for it twice.
I am not privy to those kind of details, but I just can't imagine that that wouldn't be taken into account, whether we, think there's a possibility we're liable, or if we know that it's not us, it's going to be covered by somebody else's insurance.
So there's no mention of it anywhere. It just has one number for incurred but not reported. So I don't know if that number, I'd like to find out if that number, like you said, has been factored that way.
Commissioners, Solomon, could you just clarify what does NAJAS mean for the benefit?
Oh, Najas is one of the leaseholders
Oh, okay, got it.
in the harbor, I'm sorry. So for any generic leaseholder, a restaurant, a bar, anybody that's down in the harbor, Kincaid's, as an example, when they sign a lease with us, they would sign for 5 years or 10 years or whatever it is. And as part of the requirements of the lease, they must provide insurance showing that their premises are covered. As part of the lease that they sign, our requirements are that they name us as an additional insured, so that if a claim comes in, if someone slips and falls in Kincaid's, and then there's a lawsuit that ensues, when that lawsuit comes in, we as a city say, okay, insurance policy A for Kincaid's, we're being brought in on this. Since we're additional insureds, we're handing off our cost of defending this, and we're handing off any money that might be paid out on this back to you because we're insured like you are on your policy. So when you're calculating what the exposure is for the city on any potential claims, which is part of the factoring that we have in the Internal Services Fund, those sorts of things, if we charge for the square footage of Kincaid's twice, essentially. Once, Kincaid's has already named us additional insured. So we're set. We don't have to allocate an expense for that exposure, for that square footage, because we're already covered by the Kincaid's insurance policy.
Got it. So essentially, you're saying that we want to make sure that the city is not basically paying twice or covering twice, making sure that everything's adequate.
That in this case, the harbor area, the Tidelands area, is not contributing towards insurance expenses that are already being absorbed by the leaseholder.
So you think that the ISF funds, that allocation for insurance is not just standard liability insurance for like city-owned facilities or whatnot? It's just.
Well, it's based on square footage, so
Right.
that would be something that for the protection of the structures themselves,
Right.
we would charge for.
Right.
Because Kincaid's isn't covering that. But another component of it is liability.
Okay.
And the liability we are being covered for because Kincaid's has named us on their policy to cover us. So when you're using the factors here of the self-insurance program fund, part of the charges that are made to the Tidelands area for those leaseholders, using Kincaid's again, is the square footage of the occupied structure, the current value of the structure occupied. Okay, we would charge for that in the Internal Services Fund. But for those claims that are incurred but not reported, claims that we don't know about yet, or for potential, for the 5-year property insurance claims that have occurred, there's a formula to determine how much we're going to charge that area based on the claims frequency. But the city may not already be paying for that. So there may not be a need for the Tidelands to pay the liability exposure where the leaseholders have already essentially paid for that for us by naming us as additional insured.
So essentially, you're looking for clarity regarding the insurance for the leaseholds.
Yes.
Basically, that's what you're looking for.
Yes.
I don't think it even needs to be that specific. I personally would not want to see anywhere in the city, I would not want our incurred but not reported number to include anything that we aren't responsible for, whether it be in the harbor area or anywhere.
Right.
And so I will double check with our risk management division and make sure that that's taken into account. But I just can't imagine that it's not taken into account.
Commissioner Solomon, if I understand this right, and I'm not an expert in insurance, so just help me out. You're saying, for instance, the example that you gave of Kincaid's, we have a pier area that's, let's say it's 100,000 square feet, and Kincaid's occupies 30,000 of that. Kincaid's carries insurance for that 30,000 square feet, so we shouldn't be. Is that what you're saying?
From a liability
From a
perspective.
liability perspective, right.
They would
We're
be-
responsible for the common area around it, but we're not responsible for the physical pad that's on.
We are responsible, to answer your question, we are responsible. But if something happens, based on the way that the insurance policy is set up, we simply hand that claim, that responsibility, we're defended by Kincaid's insurance company.
So you're-
They take care of it for us.
So we're
Okay.
not double paying, yeah.
Right.
Right.
Okay, I think I get it. Thank
So
you.
there's a contribution that may not be necessary on the liability portion that we've already assessed to the leaseholder or to the leases. The reason I bring it up is because let's use the Tidelands as an example. Back in 2003, our ISF charges in the Tidelands area were about somewhere around 4 to 8%. It was like $400,000 or $500,000 a year. And then a few years later, in 2006 and 2007, we're over $1 million. Now we're at 1.16, and it's 17% of what we're bringing in the Tidelands. The Tidelands brings in about $6 million a year, give or take. The Uplands another $4 million for $10 million total. And those two departments are paying $2 million in insurance services funds. It's not the first time it's come up. Back in 2006, it was a problem. In 2009, we had an agreement with the State Lands Commission for the way that we were handling the funds out of the Internal Services Fund. Redondo Beach harbor money issues, these were complaints that came from within. Whistleblower claims budget mismanagement from 2008 and 2009. And here's a administrative report from 2009 with the City Council, where we had an agreement with the State Lands Commission, because the Tidelands are state lands, where we have to provide a detailed accounting of the income and expenditures from the Kincaid's lease specifically. We're supposed to provide the commission with at least 14 days' notice in advance of the City Council's consideration of any proposed leases in excess of 5 years. I don't know if we still do that. Seek commission approval before the State Lands Commission, approval before committing to any trust-related debt finance capital improvements in excess of $250,000. Just seems like the last audit that we did for the Tidelands and the Harbor Enterprise area, they did an audit for it and they looked at it, but it was really more along the lines of, do these numbers match up? They didn't
That's
talk.
definitely, because it's a financial audit.
It was really
the
narrow in scope. For the businesses that are down there, the businesses, the properties, they already pay for government services and taxes, sales tax and other taxes. So they're getting taxed twice. Grants don't pay taxes. I really think that there should be an audit, a more expansive audit of how we are applying internal service fund charges to the Tidelands area. It's a state trust, it's a state land trust. The insurance is just one example of where it looks like we are perhaps collecting twice on something. Maybe this is more appropriate in a referral to staff to consider. But at 17% ISF charge for the harbor, for the Tidelands, where 12 years ago it was half of that, something's going on that doesn't add up. And I'd be interested in seeing in far more detail the cash impacts on some of the ISF charges versus other funds, how what we're charging the Tidelands, our harbor, compared to other small harbors like Ventura, if we're in line with what other cities are charging. I realize there's a difference between cities as far as costs are concerned.
It's huge.
It's
because
huge.
some places are charging directly and other
Right.
places like us are charging indirectly.
It'd be interesting to see how other places do this. The scope of work on the previous audit was really narrow. And I'd also like to know if, from this agreement back in 2009, if we're still reporting to the State Lands Commission on an annual basis about some of these things that were contained in the settlement. Like, are we still complying with this 14 days notice in advance of city council consideration of any leases in excess of 5 years? Or do we have to? I don't know if it was a temporary agreement. I think the changes you're making are great, but I also think that a more comprehensive review of what we're doing in ISF charges, specifically in the harbor enterprise area. We had all this deferred maintenance down there that didn't get taken care of for years. Money was flowing out of the Tidelands. We had $30 million in the Tidelands fund 6 or 8 years ago, and now we have $17 million. Did that go towards purchasing leases? Do we just have less
Some of it
income?
did.
Some of it did. Well, I think an audit of where that money's gone and how we're allocating it and how we're charging almost 20% of the money coming into a state land trust to support the general fund in Redondo needs to get looked at.
Now, there have been, I couldn't give you a number, but there have been a few audits over the years looking at just that, and we've never received feedback that it's
Because they maybe were just looking at the
not
numbers.
proper.
Do the numbers add up?
No,
Right.
no, in our financial audits, that is all they're looking at, but we've had additional audits where the scope of work is to look at the allocations.
Well, I'll be more specific then. It'd be really nice to see when you're talking about the insurance, for example, and I'm sorry to focus on the insurance, but it's what I do.
Right.
You know, as part of what our insurance provider has for us are available actuaries, looking at our schedule of properties and how we're handling our claims exposures, the frequency and things like that. Rather than, I'd like to know if there's formulas behind these numbers and that those formulas are systematic and used equally across the city.
For the allocation basis, I know that, it's all done by third party.
The allocation of insurance charges are done by a third party?
No, not the allocation, the costs that are being allocated.
Okay, but the formula for deriving those costs.
Yeah, are right there in the APP for you.
This is the theory behind it, but
Right.
not the actual percentages and numbers and formulas that they use to derive it. This just says that it's based on these things. It doesn't tell me, for example, we had X number of dollars in incurred but not reported. That's in the report. I've seen that. So that number is there. The claims experience should be there somewhere. And there should be a valuation of all of our capital improvements. We have that. So what number are they plugging in to squeeze down all of those numbers into an ultimate number?
Yeah, so we have provided that to our financial auditors at times. And because we have a cost allocation plan, a software program that we use, and they have gone through that and picked, of course, they're not going to look at everything because auditors just do sampling. They've picked some samples, and we've provided this is how we got to that number, and then they've verified that.
So essentially, Marnie and Commissioner, we're just, actually, Commissioner Solomon, you're basically looking for more clarity, essentially,
I think so.
which would be helpful.
Just if I could give one more example that was troubling to me that I discovered. which was back in 2007, the city had excess funds in the ISF. And they used that money to pay for the North Branch Library. So if we had excess funds from the ISF, maybe we didn't allocate it the right way. And why was money then from the Tidelands used to pay for a library? It should have been returned to the Tidelands. Now, I don't know if we had an audit after 2007, but that's an example of something that would have been missed. That money, because it's the Tidelands and because it's the state trust, has to be spent in the Tidelands, according to Public Resources Code. And if there's money that's going to be in surplus or excess, it should be returned to the Tidelands and not used on capital improvement projects or used on capital improvement projects specifically in the Tidelands. And I would want to have clarity on that, where if there are excess funds like we had a couple months ago, and it's from anything generated out of the Tidelands, that it's being spent in the Tidelands. These are the kinds of things I'm talking about.
You said that was in 2007, you said?
In 2007, November of 2007, there was money, Tidelands money that was in the self-insurance fund from all departments, was $2.5 million was spent towards the North Branch Library. And then the Friends of the North Branch Library raised another $1.25 million to pay for it. These are, things like that are how we end up with deferred maintenance in the harbor not getting taken care of. Because there's excess funds or there's funds that maybe shouldn't be diverted out of the Tidelands, that are being diverted out of the Tidelands. So you end up with a parking structure that's crumbling. You end up with a pier area that's crumbling. You end up with problems with the pumping at the Seaside Lagoon for money that would have otherwise been spent in that area that's allocated to other parts of the city. So, like I said, maybe it's something best part is a referral to staff that I don't know how long it's been since we've had an audit. I'd like to have a broader audit with more depth to it. It's been too narrow in the past, where we're just looking at the money and whether or not the plus and minuses add up, and actually see if all this money really should be coming out of the Tidelands like that.
So I think what we can do is we can make a referral to staff in item number 9. I think that's good discussion regarding the Tidelands funds and essentially just budgeting and how essentially we need a lot more clarity, and that would be helpful. And if we can maybe not necessarily have an audit, but let's have staff review it, have them come back, and we can go from there.
Okay.
I think we should just,
I'd be amenable to that. Thank you.
Yeah.
Thank you, Mr. Chair.
any more?
Are you going to get to that in referral to staff and be more specific on what
Yeah,
kind
so-
of a review
Yeah,
you'd
so
be
maybe
looking
a
for?
possible review we could have is, we could have a more comprehensive, just clarity on the ISF, harbor maintenance, and Tideland funds. I think that kind of covers it from a big picture.
I'd like to see the cash impact of ISF charges for the Tidelands versus others. I'd like to know, you have an idea of how we compare to other cities?
And that, I don't know
Can't
that
be done?
that's,
Okay.
really possible because it's apples and oranges.
Okay. I'd like to have a better idea of how we charge for the liability portion for those parts of the harbor area or any leasehold in the city that may already be laying off that expense. The TOT funds from the harbor, they stay in the Tidelands?
No, general fund.
General fund. So the TOT that comes in from the Crown Plaza, the Shade Hotel, and the Portofino, even though it's being earned in the harbor Tidelands area, is going into the general fund?
Yes.
Is that okay with the Public Resources Code? Isn't money earned in the harbor supposed to stay in the harbor?
I don't believe taxes like that are,
Okay.
because I know it's been questioned a lot.
That's their biggest revenue source for the general budget, is it like the TOT?
It's one of the top 10. It's certainly not the biggest.
Okay, one of the top 10. Sorry.
I'm looking at Public Resources Code 6306. And I'm not an attorney. I would not presume to be an expert on this code section. But I don't see where those taxes would be exempted. So I would like to find out
So could you repeat that again, Commissioner Solomon?
whether or not or why TOT funds earned in the harbor
Stay in the harbor.
do not stay in the harbor to be consistent with Public Resources Code 6306.
Is that the code that governs the Thailand, the state-controlled funds, or?
It governs granted public trust lands.
Okay, so that's the,
So what's that code again, Commissioner Solomon? Public Resource Code?
California Public Resources Code 6306.
Okay, so we will make a referral to staff in item number 9. 1, and essentially it's just further clarity on all these items. Number 1, liability insurance for the harbor and leaseholds. Number 2, the ISF. Number 3, the harbor maintenance. Number 4, tidelands. And number 5, the TOT funds with respect to them either staying in the general fund and how it relates to the Public Resources Code 6306.
Whether or not they should stay in the tidelands.
yeah.
TOT funds stay in the tidelands or general.
Right now, they go to the general fund.
Right.
So those TOT funds that are earned in the tidelands being paid to the general fund, rather than remaining in the tidelands.
So we have 5 items that we will make a referral in item number 9.
Thank you, Mr. Chair.
Further discussion, commissioners? Motion to receive and file. Do I have a motion?
I so move.
Second.
All in favor?
Aye.
All opposed? None. Motion passes. Item number 7, Open Gov review to discuss. Marnie?
Yeah, we have discussed OpenGov before, but really with the focus being on our FAQs. Some of the questions that, since I've been your liaison for the commission, some of your questions have been for more like line item detail kind of thing for the budget. And so this evening I just wanted to show you the workings of OpenGov so that you might be able to find some of the information you're looking for.
So Marnie, previously we had a demo of this, I believe, in 2017. Is that correct?
Yes, with the focus being on the
Budget and finance.
frequently asked questions
Got it.
portion.
Thank you.
So in the how do I, budget transparency is our OpenGov platform. And a landing page there describes OpenGov and provides some information on
I'm sorry,
what you're
can you
looking
go
at.
back? Where did you get that, where did you go first? Sorry. So you
It
went
was in the how do I,
How do I? Okay, okay.
and how do I view budget
Okay,
transparency.
okay, got it.
And so in the middle of the landing page, there's a link then to the portal. So again, this is the part that you've discussed as a commission these frequently asked questions, which in Open Gov are called views. But today I want to walk you over to the other side of filters. Couple examples like to show you. I know at your last meeting you were particularly focused on personnel costs. So to look at personnel costs, they're an expense, so we would leave that alone. Expense type, that's the same as these listed over to the side, the personnel maintenance and operations. If you did want to see just general fund personnel costs, we could go to funds, and within governmental, we'll see the general government. So I'll get rid of everything here and pick just general government, and that'll give me just general fund. The departments, say we want to look at financial services and see the general fund personnel costs in our department. Again, I'll get rid of all of them and only select financial services, and I've got that. The expense type, here's where I want to narrow it down to just personnel. Get rid of all of them and check just personnel. And so here we're going to get to financial services personnel costs. And over to the side, it will give you all the different line items. Just for visibility, the default groups a lot of these, but you can keep doing show more until there's no more grouped, and then you'll be able to see all of them. If you were looking just at the 17-18 budget, we could look at a pie chart, and of course you can slide that along to any year that you're looking at, but if you just want 17-18 budget, then you can see the various pieces. Or full-time, like last meeting you were trying to determine whether there were also part-time costs or if it was just the full-time personnel that you were seeing listed in the budget. That'll tell you whether that's there or not. So that's one example of how you can do, but you can select anything from any of those choices. Reset will just put us back. If we want to look at one particular expense, we'll leave it for all. Maybe in this case we'll do all funds and all departments. We'll look at personnel again. But this time, instead of all personnel, maybe we just want to look at just the retirement costs. So there's 3 different object numbers. 4 PERS, our PERS unfunded liability, our retirement city share, and our retirement employee share. And then you would be able to see historically what has happened to our retirement costs. So just those kinds of things, I just wanted to walk you through and show you, if you're looking for detail, you're still not going to get down to, I'm sure, the detail that you'd like of each person and broken down this way, but it does give you a lot more detail than you'll see in the printed budget
Yeah,
document.
I'm gonna have to start using it. I've been more or less looking on the printed stuff. I'll have to start
Yeah.
utilizing the website more again.
Yeah, and then there's actuals going back. Most recently, I updated it for our latest CAFR. It won't tie directly to the CAFR just because of some of the accounting things that we have to do. For example, like we were just talking about in the proprietary funds, in the internal service funds, and the enterprise funds. The expenses for capital are not shown as expenses in the CAFR. They're shown as the assets they create. Well, that makes it really inconsistent with budget. So we've put it back to be an expense. So you can see what was spent because you can, you can be looking at the budget versus the actual, and you'll have a better comparison.
Questions, commissioners?
How's the traffic, the web traffic on this? Have you
It
seen an
is
increase?
light.
Light.
So I'm here drumming up business.
Just a second.
Further questions? Motion to receive and file?
I move.
Second.
All in favor? Aye. All opposed? None. Motion passes. Thank you, Marnie. Item number 9, member items and referrals to staff for budget and finance. So we discussed this in the previously, and I'll repeat it again.
Mr. Chair, I'm sorry. I just want to clarify something to help clarify, maybe make it
Sure.
easier. So when we're talking about how much you charge for, let's say, property. if it's-
Insurance.
Insurance. If it's $1 for every 1,000 square feet for a place that's not occupied by a tenant, versus how much would you charge for $1, you might charge 80 cents per square foot for a property that's occupied by a tenant and has named you as an additional insured, or where you have allocated some of that risk away from the city, that cost away from the city. So that's why I was talking about how the numbers are applied. And that's, I think maybe this, I'm hoping clarifies a little bit. So if it's $1 per square foot for a property that's not occupied by a tenant that has named us as additional insured, would it be then 80 cents or 70 cents
How would
per
we
square
discount,
foot?
yeah.
How do you discount that formula for where the tenant or the leaseholder
we
has
have that.
absorbed some of that risk
Yeah.
from the city? And hopefully that makes it more clear.
Okay, so item number 1, referral to staff is clarity with respect to the liability insurance and how it is allocated if there is a lease or a non-lease,
Yes,
simplistically,
yes, thank you.
okay? Item number 2 would be, and all these items is essentially looking for clarity and further detail. Item number 2 with respect to the ISF budgeting and further details on that. In particular, one fund to another fund? Or is it consistently always just one fund?
Yeah, I myself need a little more clarification on that.
Yeah.
So we're not asking for clarification, on how they're allocating those funds to the departments and the enterprise funds. We're asking,
What the cash impact is.
okay,
How are the cash flows?
okay.
Item number 3 is like further clarity on the harbor maintenance, because in some sense it's related to all the other ISF funds.
Yeah, now harbor maintenance is, we're not talking about an enterprise fund, because I don't have my budget in front of me, so I don't know what the enterprise funds are. When we say harbor maintenance, is that an enterprise fund, like the Tidelands Fund, or what are we talking about?
Well, the harbor area, harbor enterprise essentially is both the uplands and the tidelands.
Right,
It's-
it's the
It
uplands.
consists of the entire area.
Right.
There are separate categories for each, and each have their own expenses.
Right, and each has its own enterprise fund, right, with the.
Well, the enterprise fund, I think, is a generality.
Okay.
And then the harbor, the tidelands and the uplands
Right.
are separate silos within that generality.
Okay, all right, yes.
So essentially, item number 3 is further clarity with respect to the harbor maintenance.
Now, I understood, did you want any information on harbor maintenance, or were you just saying if we're paying too much for internal service funds, we're not spending it on maintenance?
Well, the idea is that the money we're diverting away from the tidelands is not being used for deferred maintenance.
Yeah, so you didn't really want clarification on the maintenance, right? Just the internal service fund charges?
The charges for that, and where, if the money's getting reinvested for the maintenance.
Okay.
Separate item, but somewhat related.
Yes.
And then, so item number 4, further clarity along the same lines with respect to the Tidelands Fund. And then the last item is the TOT funds, clarity on the TOT funds. Do they stay in the general, or does it go to the Tidelands? Just further clarity with respect to that. Or should
Because we
they?
already know
Right.
they're going to the general, so yeah.
And with respect to Public Resources Code 6306.
And generally, really speaking, the funds that are coming out of the tidelands in association, certainly some of the charges the city have from taxes and other things are going to be taken out of the tidelands from that area. But how is that done, really, you know? How is it that 100% of the TOT that's earned in the tidelands ends up in the general fund? I think that's what you said.
Yeah, clarity on that, whether, is it because of law or is it because of moving of funds? Further discussion, commissioners? Comments, Marnie? Okay. Motion to refer to staff the 5 items that we just discussed.
Oh, we have a
Oh,
public,
public comments? So with respect to this time, this is only for item number 9 that we are referring to.
Internal service funds?
Items number 9, which we just talked about.
Yeah, is that internal service
Yeah.
funds? Just to
Correct.
clarify.
Uh,
I
did
made
you-
it here just in time. 3 hours of traffic, so it's a miracle I'm here. I have a request.
Could you please state your name and district?
Gary Yost, former Budget and Finance Commissioner. A longtime proponent of harbor revitalization. Longtime proponent of economics over politics. A very beleaguered individual. I have a motion to request, receive, and file 2 documents that, when I was on the Budget and Finance Commission, we looked into internal service funds. I have a history of it since 2003 on this spreadsheet. And on this spreadsheet, I have a comparative analysis I did of other small boat harbors, including Ventura, Oxnard, Dana Point, to show the lack of internal service fund levels that those harbors have compared to Redondo.
Motion to receive and file?
Second.
So I made 8 copies. I'll keep one for myself and hope there's enough here.
All in favor?
Aye.
Aye. All opposed? Receive and file.
Okay, there's a couple points I want to make on this topic. But I'll probably wait a little bit till you guys have a chance to have those charts go around. But one of the points I raised last time on this thing is I wanted a history of how these internal service funds have changed over time And my point was that they really started to get out of control about 2003 when there was a major policy shift in the city. And staff did an analysis, but they only went back to 2006. Now, the reason they gave was, well, that's as far as their automated system went. Well, the budget documents are available to go back further, and the point that I want to make here is if you look at the 2001, 2002 column, the second column, and you go down to the little box that says ISF charge summary in the middle of the page, and you'll see that they weren't called internal service funds back then. They were called fund transfers. And in 2000, they were $446,000, and in 2001, they were $331,000. And then when they started the internal service fund policy, they started to shift these from what they called fund transfers over into ISF charges. And you can pretty much see what happened after that policy change came along. These things skyrocketed. Now, they were started by Lou Garcia, who was the city manager at the time, and he happened to be in a box. He had a CalPERS shortfall he was trying to resolve, and through a change in financial policy, they came up with these internal service fund charges under the guise that, oh, we just want to allocate all the overhead properly to all the departments. Well, that's all fine and well if you stay within the general fund. There's no cash transfers out. But when you charge these to an enterprise fund, there's a big difference. The fire department gets an internal service fund charge, but it's also given a paper budget allocation to cover it. The harbor gets an internal service fund charge to the enterprise fund, but it gets no budget increase. So what happens is there's a cash transfer. And if you're asking staff to clarify things, one of the key things to clarify is there a difference when an internal service fund is made to a general fund department like the fire department versus an enterprise fund like the Highlands Fund or the Uplands Fund? And if they give you a truthful answer, one results in a cash transfer, the other doesn't. So this chart just shows what's happened over time here. And it was what, 2009 when I last updated this. And you can see there what the other thing that this chart shows is a comparison between had the overhead charges been left where they were and escalated at 4% a year, that would have meant that over that period 2000 to 2009, we would have charged $3,137,000 to the Highlands and Uplands. But because of this internal service charge policy change, in fact, they've charged $11,992,000 to the harbor. And that's through 2009. That's almost 10 years ago. So you could probably double that. So this policy change has resulted in a shortfall of about $20 million. And that's significant in my mind towards we need that money to get the harbor revitalized. So hopefully this chart will show you a little glimpse of the history here. And my point is, why did we need to do this? The general fund had structural budget deficits problem, that's fine. But you don't really cure it by raiding the harbor funds, which is what's happened here. The next chart that I gave you is a comparison I did about the same time that shows you Santa Barbara, Ventura, Channel Islands, Dana Point, Oceanside. I skipped Marina del Rey because it's a whole different animal. It's just way much larger than Redondo.
Excuse me, we have 3 minutes?
Make a motion to extend?
I so move.
All in favor?
Aye.
Aye.
Thank you. I didn't include Marina del Rey because it's a huge marina. It's not on a comparable scale. So the bottom line over there is you can see what their revenues were in those harbors and what the net ISF charge was to those harbors. And Oceanside's a little bit odd because they got a big general fund subsidy, but then they were responsible for providing all the lifeguard services on the beaches down there. So it really wasn't direct comparable, but I put it in anyway. And my favorite one of all these is Ventura. Ventura Harbor is in a port district. It's the legal entity that runs the harbor. The city has nothing to do with the day-to-day management of Ventura Harbor. And the port district shares in the property tax revenue that's collected. You'll see that $995,000 there. They get to keep that in the port. And what happens is property taxes are paid by the leaseholders through something that's called a possessory interest. Excuse me. A possessory interest is if a private party has a lease on government-owned land, they wouldn't pay property taxes like we would normally do if you have fee simple ownership. They pay it as called a possessory interest. It's basically the value of their leasehold for how many years they control it. But it is the equivalent of property taxes that everyone else had paid, and that's what the 995 is. When they had the port district, they set this up. No, we're going to put that money back in the harbor because we want the harbor to be successful. And I think that's an outstanding model for Redondo to consider, because one of the things that's happening here and why the internal service funds is effectively double taxation is that all the properties in the harbor area generate taxes, sales taxes, as you pointed out, TOT taxes, property taxes, and that is what goes to pay for city overhead. So for the city to come along and say, oh, by the way, in addition to the direct maintenance that's being done down there you're charging for, which I don't have a problem with, or the harbor department staff, which we're charging to it, you have to pay for a share of City Hall and all these other things. Well, these whole internal service charges are pointed back to Office of Management and Budget A87, which was designed to allow overhead charges to be charged to federal grant monies. Well, grants don't generate taxes, so it doesn't have the double taxation problem the way that was designed. But to take OMB 87 and construe it into a policy to charge the harbor for overhead when it's paying taxes is double taxation. Now we have the Beach Cities Transit District, which is also an enterprise fund, and it pays internal service fund charges. But the Beach Cities Transit District doesn't generate any taxes. So that's a little bit different. So the city has blindly applied this internal service fund charges to general funds, which are fine because they just give it additional budget allocation that covers it. They do it to the Beach City Transit District, which is probably somewhat fair because they don't pay taxes. But then they come along and they do it to the harbor, which is double taxation. So that's another one of my points. So
we've
you'll
gone-
see
we-
here.
Excuse me, we've gone another 3 minutes, so.
Motion to extend.
Yeah, you're motioning? I'll second.
I'm getting close to the end.
All in favor?
Aye.
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 So on the comparative study, you'll see that nobody was near charging the 20% that Redondo charging at the time that the revenues were a little over $10 million and the ISF charges had been ratcheted up to almost $2 million. So you'll see that that's clearly out of line with the policies that other cities have set. So this is really a policy decision. There's no law that says you have to do this to the harbor funds. This is a decision that the council made, and in part because they had structural budget deficit problems, and they decided the most convenient way out of it was to hit the harbor for $2 million a year. That may be okay for a year or two if you have a CalPERS shortfall, but to have it as the long-term policy over 20 years, it's had a material impact on the harbor funds. And if we really want to get that place revitalized, we need that money to stay in the harbor. And my proposed solution is to explore what Ventura Harbor did with the Port District, where the city just stays out of it altogether and they leave some of the tax money. They chose property tax. We have an awful lot of hotels down there. We could easily leave some of that TOT behind and try and make the harbor whole and not just use it as the piggy bank that the city can hit every time they run into a general fund deficit. So These charts were part of an 80-page report that I had submitted to the State Lands Commission. And you'll see notes at the bottom. I have the budget pages in a big PDF file that document every single one of these numbers on here. The revenues, the expenses, the ISF charges. These aren't my calculations. I'm just doing simple math here. So if anyone is curious, I know I've submitted this report into the public record before, but I'd be more than happy to email anybody the PDF that wants it. So to me, this is one of the major policy decisions this city does that has materially impacted our ability to revitalize that harbor. And that's kind of why I'm kind of sticking to this issue. So I thank you for your time and your extensions on my talking time. Thank you.
Thank you for your concerns.
All right.
Thank you.
If you guys have any questions, just let me know.
To put a point on Mr. Rowe's comment, here you have in the 2016-17, the enterprise funds and the harbor tidelands, operating revenues 6.7 million. Uplands 5.4 million. Total of about $10.7 million. And the ISF charges for those two, harbor tidelands and harbor uplands, were $2 million, just over $2.3 million, or almost, or a little bit over 20% of the income from the harbor going to ISF charges.
And those are the numbers from,
This is the, our 2016-2017 budget.
okay, the actuals that were just approved,
This is from the CAFR.
yeah.
Okay, so noted. Thank you.
Yeah.
Thank you, Commissioner Solomon. Further discussion?
Good stuff.
Move to move to refer to staff 5 items that we discussed. Do I have a motion?
Motion to receive and file?
Motion to refer to the 5 items to staff?
I so move.
All in favor?
Aye.
Aye. All opposed? Motion passes. We are adjourned. Big Brandon?
Do we need a motion to?
Oh, you,
I'll move.
sorry. Motion to adjourn the meeting. No.
I move.
Second.
All in favor?
Aye.
Aye. Adjourned.
Thank you.